Welcome to Darin Batchelder's Real Estate Investing Show. Each week, you will learn how to grow your wealth through real estate investing. Be introduced to the players that are getting it done and learn how you can get involved. And now, here's your host, Darin Batchelder.
Hello, everyone. Today we have a very special guest. We have Nick Fluellen. Nick, appreciate you coming on the show.
Thank you for having me.
Absolutely. So just a little bit on how I know Nick. My first syndication deal actually was a 76-unit townhome community in about 20 minutes south of Fort Worth in a town called Crowley in the DFW area. And there was an individual that worked for Nick, Trey Caldwell. He was one of the salespeople working in Nick's group, and I bought that deal from them. And 3+ years later, I came back to Nick and said, "Can you sell it for us?" And he did an amazing job. We had an amazing return for our investors, and I'm going to miss that property, but I'm so glad for what you guys did for both bringing the deal to me, helping me along the way, and also, finding a good buyer to come and take it to the next level. So with that, I typically ask how many properties and how many units you're invested in, but Nick is the first broker that I'm bringing on the show, and he is one of the top brokers in the DFW area. So maybe share one. What's the size of the deals that you guys do, total volume? And then I know that you also invest in multifamily, so maybe share a little bit about, where you're invested as well.
Yeah. Well, I'm quite sure, first of all, you're going to miss that deal. That was a really, really great asset. Y'all did an amazing job with that one. And so it's always rewarding when you sell somebody a deal and you get to turn around 3 years later and make them and their investors happy with a great sale on the back end. So congratulations on that. Thank you.
Well, thank you for being part of the team.
Yeah, absolutely. That was it was our pleasure for sure. And I think it's going to be a good one for the next guy. And that's
Absolutely.
what it's all about. Keeping it going. So I have been with Marcus Millichap since 2004. Straight out of grad school. I was hired here, and it's just been a really amazing time and an amazing experience. And back then, any and every deal we get our hands on, we were working on, right? So we do a 10-unit, a 16-unit, a 40-unit. I can remember the first 100+ unit deal I did was a 138-unit deal, which I've since sold a few times. And so, back then a big deal was maybe $4 or $5 million, and now it's pretty rare that we have anything, under 10 or 15 million. So I would say with where the market's gone and where our team has gone over the years, on a normal year at this point, we would probably do $1 billion in multifamily transactions.
That's crazy. $1 billion per year.
Yeah, it's in the last few years, it's been at least that. But again, the first 10 years, when values were much lower than what they are today, that number is compounding pretty significantly over these last few years. And so, used to be we'd do maybe 30 deals a year. Well, at the start, maybe we do, 15, 20 deals a year. Then we're kind of getting into the mid-30s. I think as of right now, today, which we're in May, I think we have 93 deals that have either closed or in escrow or on the market, or agreed to as of right now. And I think that should, be our pipeline through August. So, overall, I think we've done right around $6 billion in multifamily deals, and that's 600+ transactions over the years. And so it's been fun. It's been really neat to see. And I'll tell you one thing that's really interesting and hopefully serves as an encouragement for people that are buying right now that think, oh my goodness, I'm paying so much for some of these deals. Right. That first 100+ unit deal, that I sold back in, I guess, 2005. That deal, we sold last year. In 2005, I think it was worth 32 a door. Last year, when it's 16, 17 years older than it was back then, was mid 140s a door. So, I think that's what you see in DFW, historically speaking, is that values are going to continue to rise, and with the in-migration and inflation and the disconnect between the price to buy a home and the price to rent an apartment, you got to feel pretty good about investing in multifamily right now. So we're real bullish on the opportunities that this DFW market has. And then to your second comment about investing in deals, I think we obviously have a front row seat to seeing people like you that have buying deals and making money on the back end. And so obviously that's a great investment vehicle for people who are doing this day in and day out. So over the years, I think I've GP'd 12 deals, myself, some solely by myself, some with clients. And then I've passively invested in, 50, 60 deals. I'm not sure exactly how many, but it's just
crazy.
An amazing vehicle.
I mean,
yeah.
I had no idea that you were invested in that many deals, right? And that says a lot about the asset class. If you're trading these things and brokering these deals time after time, that you're also investing your own personal money in these types of deals.
Yeah, I believe in the market, and I believe in real estate as an inflation hedge. And it's interesting, as even deals that I've been in that you're like, oh, this one's kind of off to a rocky start, or
right.
Maybe this is a harder deal to manage, or had more deferred maintenance, or all the issues that everybody always runs into. You see that ultimately just having a good management team, a good operating partner, good GP, and really just time on your side, you're going to be taken care of if you can, ride out the storms. And so, fortunately, even the worst deals have been pretty dang good deals relative to what the other investment opportunities are out there right now. So it's the place to be. Dallas-Fort Worth multifamily, or Texas multifamily for that matter, right, is certainly one of the best markets to be in the country. Feel very fortunate to be in this market right now.
Yeah, you're in the right place at the right time. But you know what? People say overnight success, right? You talked about it. Like in the beginning of years, you had some, the values were down and you were slugging it out and you were learning the business. But now you're reaping the rewards. But you mentioned rocky start, I would say that to the listeners, like, I invested in a lot of different passive deals, and I would have some people come to me and say, what are your dogs? Like, who are the bad operators and good operators, And I'm like, I'm not talking like that about anybody. Right. And
right.
In my mind though, I'm picturing like one of these rocky start deals, right? Like, oh, I've got this deal that's like not going so well. A year later, that deal, I'm like, I start seeing some deals that are trading right around it. And I'm like, holy cow, we're sitting on a gold mine with this thing. And then sure enough, they turn around, the occupancy starts going back up, and it turned out to be a fantastic deal, more than double your money type deal. And had I told somebody that, hey, look, watch out for this indicator or this deal or whatever is bad, those people would remember that, forever. And that's where you kind of have to ride some of these deals out. They don't all go up in a straight line.
That's right. And look, anybody who's ever syndicated a deal, that it's like anything else that we do in life. You get better at it over time. You learn from your mistakes. Hopefully you're adjusting on the fly. You're seeing what's working, what's not working. That could be staffing. That could be, more macro level management. That could be the upgrades you're doing. That could be your advertising. And so, that's the beauty of an investment in multifamily, though, is that there are so many levers that you can push and pull and affect how it's going versus being in a mutual fund or a stock or
Right.
a pre-IPO or something along those lines. You have no say, no control, and you're just, your strategy is hope and pray that it goes well. Here at least you can
Right.
have a direct impact, and at the same time, most of those things that you're able to do on these properties are taking care of people and giving people a better place to live and a better community to raise their kids in and all that. So it's a very rewarding business, and it's a rewarding place to park some money and invest.
Absolutely. Even the passives, like, look, you invest in stocks, you can't call the CEO, but you can call the general partner. You could call the sponsor on the deal, and yeah, you're not making the decision as a passive, but you could at least get insight as to whether the individual, the person managing the deal seems to have a handle on the issues and how they're gonna, and you could learn from how they're gonna handle it.
Yeah, I can't tell you how many times over the years that people that have been passives and other deals that we've sold have come back and become the main partner, the lead GP, the lead sponsor on, a deal later because they went in with the idea of, hey, I'm going to invest with this person and hopefully, make a nice return on my money, but also educate myself on what they do well and, learn from really good sponsors and operators. And so that's a win-win if you can make a nice return and then
Right.
learn skills that are going to set you up to keep repeating that process and even growing the pie even more.
That's huge. So you were talking about your group and kind of the deal volume and production levels. A lot of people know about Marcus and Millichap, but not everybody does, right? And Marcus and Millichap is one of the predominant leaders in all of commercial real estate, not just multifamily, across the country. So maybe talk a little bit about the company as a whole.
Yeah, I think that's a great thing to highlight, and it's really the reason I've stayed with this firm for all these years. It's first of all, we've got really spectacular leadership and a real entrepreneurial spirit about this firm. The firm was founded in the early 70s in California, so our first several offices were in California. Our Dallas office was actually our sixth office to be opened, and over the years, I think we're now at 85 to 90 offices. Marcus and Millichap does not do any leasing, solely focused on investment sales. And so from an investment sales standpoint, we're the largest broker of commercial real estate in the country, and then have some offices in Canada as well. And so there's probably 22 to 2,500 agents across the firm now, and that one shows the size of the firm, but it also is super important because we have something called MNet, which I think is just a spectacular tool, and people will ask, well, hey, give me something about Marcus and Millichap that would be an advantage for you guys, aside from just hey, we like you, we like your team. But on a more macro level, give us something about Marcus and Millichap that would be a differentiator. Well, our MNet system is kind of like a proprietary MLS, if you will. And so if I'm a retail guy in our California office or our Florida office or or at one of our New York offices, if I have a client that says, hey, I'd like to look at apartments in Texas, those guys can literally go into our system, pull up all the available inventory, and immediately within 5 minutes have that at the fingertips of their clients. And so that all sounds good. What does that actually mean for a prospective seller? It means that we are constantly bringing buyers into this market that nobody else would know, including us. I mean, I just sold a deal in North Dallas to a guy that one of our West Coast agents, who's a friend of mine, called and said, hey, I got a good client. I just sold this building out here. It was a small building, but he did really well on it. He wants to, park it into a larger apartment deal in Texas. He doesn't know anything about apartments. He doesn't know any management companies. He doesn't know any debt sources, but he's in a 1031 exchange and would like to, move, his money over there. And so the guy flew out. We met. I had a couple deals to show him. He ended up making an offer on one, putting it in escrow, and successfully closing the deal. That buyer would not have been procured by any other agent in the Metroplex, because he had a relationship with one person, and it was our West Coast agent, And so that's happened more times than I could count over the years, and so it's a pretty neat, it's a pretty neat skill. Another thing that is happening right now is some people are saying, hey, the multifamily market's in flux at the moment. I think what I'll do is sell my deal and then park my funds into a single tenant, triple net type deal. And so we are the absolute, category killer in that nationwide. We have some of the largest teams in each region of the country in the single tenant side. And so we're able to connect them, with the right investment sales guy and, transition him temporarily from multifamily into retail. And that goes vice versa as well. So those are just a couple of things that I think are real advantages of our shop. But I mean, overall, I think the entrepreneurial spirit from the top down is my favorite thing about the firm. It just really lets us go out and get creative with our clients and really bring them a lot of services and expertise that you don't find everywhere.
That's huge. Look, they say the multifamily business is a relationship business all the way through. And, I'm thinking, as you're talking about that, I mean, that plays into that Mnet, platform and all the connections that you have across the nation, because you have this, this common employer that you guys are all working under the same umbrella on. And then people have different relationships with people all over the place. And so, a guy in California who's an agent, you don't know his customer, but he can vouch for his customer. So right. Because he vouches for his customer, you have confidence that this guy is the real deal. Where if he had just called you on the phone, you may not have had that same confidence. That's right,
100%. You feel an obligation to help your colleague, right? And if they're calling me and taking the time and saying, hey, this is a valued client of mine, then obviously we want to make sure they're taken care of, just like we would want our clients taken care of. And we've done the same thing. We've had clients that have said, hey, Nick, Bard, can you get us in, hook us up with your guys in Orlando, or hook us up with your guys in Atlanta, or various other markets. And so we love making those introductions and getting them hooked up with somebody that hopefully can help them and make a splash in a new market. And brokers like to catch the guys on the front end too. You never know who the next big thing's going to be in any market. So it's great to get to sell guys some of their first deals when they're entering into a new space.
Yeah. So, for the listener's perspective, what he's talking about there is, say you have a syndicator who does a few deals in Dallas, and then all of a sudden he decides, you know what, I want to go to Jacksonville and start buying deals in Jacksonville, but Nick and Bart are focused on Dallas. Well, if they put that syndicator in contact with their counterpart in Jacksonville that they trust, it's a win-win for the agent in Jacksonville, and it's a huge win-win for the syndicator that asked for that introduction. So that's a huge value. Well,
I think it's a huge value, and honestly, I think even right now with what's happened in the market in the last month, even the value of that is compounded even more, because there was no shortage of buyers 30 days ago or 60 days ago, but all of a sudden, everybody's the market's tightened up a little, and everybody's kind of on hold or trying to figure out what's happening out there right now. And so when you can be working with somebody that maybe has their own bank relationship in another area or is a low leverage buyer. We just closed a deal today with a buyer that we met out of California who is a very low leverage buyer, and he was a 60% LTV guy and financed the deal with a bank loan. And even though he was in escrow when the debt markets were falling out, it didn't matter to him because he had a very good bank relationship and he wasn't trying to get max leverage. And so again, that's those type of buyers are valuable, even more so with what we're going through right now as the market's shifting.
So you alluded to kind of this, hey, the market's shifting. Explain that a little bit. Is it due to rising interest rates? Is it due to inflation? Is it due, are people just getting scared? Is it the stock market going down? What's causing it, do you think?
Yeah, well, I think a few things. One, I would say for the first maybe 13, 14 years that I was doing this, it was, if you're buying a deal and you could get a 10-year Fannie Mae loan or a Freddie Mac loan on the deal, then that's just what you did. You put the 10-year agency loan on it. And I think, over the last 4 or 5 years, people have started to realize as they're like, wow, I shattered my, performance projections. I think I'll sell this thing after 3 years instead of 5 years. Then they're like, oh, wow, I've got a loan that's now at a bad leverage point. I've run out of interest only. The debt basically didn't match the exit strategy. And so what we saw, within the last few years was people say, hey, maybe I should just put a bridge loan on this deal. I'm not likely to get out of this, or I'm not likely to hold this deal for more than 5 years. Probably I'm going to get out if I can implement my business plan quickly. I'll probably get out in 3. And so they were putting these bridge loans, these debt fund, deals on the deals they're buying, and so there was a total of the deals we did last year, 90% or more were that type of financing, and it's a floating rate interest rate. So all of a sudden, you buy a floating rate interest rate or floating rate. You buy a cap basically, so your interest rate's capped. And those caps cost nothing. I mean, pennies on the dollar relative to what they are today.
Before, right?
Yeah,
Before
that's
they didn't
right.
cost
so
anything.
They cost nothing, so that's what everybody was doing. They're like, well, this is great. I have a low rate, and I manage my exposure, and that's great. And the lender would give you a 75, 80% loan to cost, so you're rolling in all your CapEx. Life is good. Hey, I'm going to implement my plan. I'm going to sell this thing in 3 years without a prepayment penalty or without a big prepayment penalty, and rinse and repeat. Well, that all worked great until, interest rates popped here in the last, 60 days, basically. And so what's happened is, on a normal deal, an interest rate cap cost, 30, 40, 50,000 before, and that same cap is 500,000 or 600,000 now. So that's number one. That cost has skyrocketed. Interest rates themselves have gone up, and so if you're buying a deal at a 3.5 cap, but putting a 4.5 to 5% interest rate loan on the deal, guess what? That math does not work. So that's a problem. And on top of that, when you have a higher interest rate, then guess what? That means your loan amount's going to go down. So it's kind of a triple whammy. The cost of the interest rate cap has gone up, the actual interest rate itself has gone up, and the loan proceeds have gone down. So the only way to make sense out of most of these deals right now is to pay less for them, right? I mean, there's just no fancy financial engineering you can do. The only way that most of these deals work is to pay less for them, or if you have the right equity, again, I fully believe these deals are going to go up in value. I mean, with, again, the migration patterns coming into Texas, the cost of homes, and honestly, how much more, home values have been off the charts high here, but now, they're not only off the charts high, but the interest rates are up almost 200 basis points if you're trying to buy a home. So I don't even think a lot of people are going to be able to qualify for that anymore. Right. So it's just all these things are pushing people to apartments. So I think all the fundamentals are going to be great. I think when we come out of this, and however long it takes, people are going to be in the money. But right now, if you have investors that are saying, hey, I need cash flow, the only way to get cash flow immediately is to pay less. If you have investors that are like, I don't care about cash flow, I want an equity multiple and an IRR, I think there's going to be some really great deals to be had. But that's what we're working through right now in the marketplace. And it's just, I've been through, COVID, and I went through the Great Recession. Never have I seen it turn as quickly as it's turned in the last 30 days. It's been a dramatic change, and it happened really, really, really quick.
That's crazy. I mean, everyone says it's different this time, right? But when there is a change in the market, it can happen pretty darn quick. But
what's interesting about it is that COVID, when COVID happened, you're like, oh my goodness, are people going to pay? Like, what's going to happen here? Oh, I can't charge late fees. People don't have to pay. I'm waiting on the government. Or when the government sends this money, is it going to, make it to me, or are they just going to keep it? And, there were a lot of factors that made you worry about the actual performance of the deals. Right now, the performance of the deals is off the charts. I mean, Every set of financials we're getting, these deals are doing exceptionally well. So, I think that part is very encouraging, but taxes obviously are going way up. This year especially, the assessments have been aggressive. Insurance costs are through the roof right now, and interest rates are really high. So those are major challenges unrelated to the fundamentals of actually operating the property. So that's what we're contending with. So it's very different than COVID, but very challenging in a different respect.
Yeah, look, as an operator, I remember when COVID hit, it was like, holy cow, you could never have forecast that. There was no way to plan for that. And there was a worry, like, are people going to pay? And I was really surprised that every month we continued to be positive cash flow. It was, there were tenants that didn't pay and were slow pay, but there were plenty of tenants that were like, you know what, I'm going to pay for food, and I'm going to pay for where I live. And so there were still a lot of tenants that rent was one of the first things they were going to pay.
Yep, for sure. I mean, and look, we came out of that much faster than I think anybody expected. And so I'm hopeful that that'll be the case here. Obviously, we have some very macroeconomic things we have to get under control, and we've printed an absolute insane amount of money that's been injected into the economy that, it's going to cause, we've seen it. The inflation is just absolutely off the charts right now. But again, real estate's a great spot to be at when that happens.
So let me ask you a question. For me, this is like the $1 million question, but so real estate is, always been told that it's a great inflation hedge, right? And I think about these multifamily deals, and if you have, wage inflation, people are making more money, then it should translate to being able to pay more for rent. Okay, so if your rent is going up, and say that's, but based on inflation, inflation right now is at 8%. Even if it's not at that level, your rent is going up, and that's the top line. And if you fixed your debt service, that's the ideal. But even if you didn't fix your debt service and it's floating, that expense is still, less than half of your expenses compared to your rent. So now over time, you should have that increased profitability. And that's where I see real estate being a good inflation hedge. The big question mark is, okay, well, if interest rates keep going up, will cap rates end up going up? And if cap rates go up and the exit cap rate on these deals is higher, which one is going to have the bigger impact? The inflationary increase in profitability or the negative impact of maybe having higher cap rates at some point?
Yeah, well, I mean, I think the deals, most of these deals, if you implement the right business plan, you would still, even if cap rates rose, you're still going to be in the money, because I think there's enough ability to influence NOI. And, you know, I saw something today, and I can't recall the exact source, but basically our rents were still projected to increase like 35% over the next 5 years. You know, and that's Dallas-Fort Worth. So, I mean, you know, you're talking 7% rent increases a year. And by the way, that's probably mostly organic. So if you still have these deals that you can upgrade and get $200 or $300 pops, you know, then you're talking about even more significant, you know, NOI and revenue growth than even what that number projects. But you know, yes, short-term cap rates are going to have to rise if interest rates stay high. I think what I find very hard to believe is that we won't figure out a way to get these interest rates down when things settle. I feel confident that that's going to be the case. You know, but I will say this: if you look and just do the math, you know, let me ask you. I'm putting myself on the spot here, depending on what you say. But you know, what would you say that you know, an average home in DFW would be, you know, price-wise would be right now? You know, if you were just throwing a number out there, if somebody was like, hey, I want to go buy just a nice home, but nothing crazy over the top, but just a nice home.
Yeah, I live in Prosper, which is north of Frisco. Last stop on the tollway, and I'd say the average homes here are probably $400,000 to $500,000.
That's what I would say. $400,000 to $500,000. It'd be hard to find much. So if you're putting 10% down, right, which is a lot of money.
Most loans is 20%, right? So
that's
you'd have to
right,
be
right.
You'd be putting down $80,000 to $100,000 to get into, you know,
that's right. Well, so if you've got, you know, even 10%, for the sake of this, which I don't think most people have, you know, $40,000 to $50,000 to $100,000 laying around. But let's assume you saved and you had that. Right now, your interest rate's probably going to be, if you have perfect credit, which most people don't, you know, it's probably 5.5%. If you don't, it's probably north of 6%. And so when you start doing the math, your principal, interest, you know, taxes, insurance is north of $3,000 a month.
Right.
You know, I mean, if that's option one, and option two is to live in an apartment, I mean, you've got a lot of runway in apartment rents before you're anywhere close to that.
Right.
You know, plus you don't have the responsibilities of, you know, lawn care and repairs and maintenance, et cetera. So, I mean, there is a massive delta between those two numbers. And so I find it hard to believe that we aren't going to figure out a way to get rates down. There's no obvious, easy solution in the near term other than slowing down some of this inflation. But I mean, I think historically speaking, you know, when I first started in the business, we used to underwrite 6.5% interest rates. If I go back and look at the very first deals that I was underwriting, I'm like, oh man, this is crazy. And then I can remember as time went by and they kept going down. I remember when somebody got their first 3% interest rate that I'd ever heard of, I was like, oh my goodness. And then it's just over the years, it's just like, now I just was sort of expecting it to be in the threes. And so this is it's just a massive shift the other direction. So, I mean, nobody has a crystal ball right now, for sure. I mean, and obviously other world events, you know, that are occurring and conflicts around the world and, you know, just different crises even here and along the border. And I mean, there's just so many things that are having an impact on what's happening in the U.S. and in the debt markets that, you know, it's hard to say what's going to slow it down. But I find it hard to believe that we won't get these interest rates under control and get them back down. but there's going to be some pain in the short term.
Right. And, one of the things that I don't think it's talked about a lot, when people talk about, hey, if we go into a recession, like everybody just thinks it's going to be horrible, right? But I think like, okay, if we go into a downturn, if I'm living in California and I lose my job, I'm thinking, where can I live that's more, better cost of living, right? And so I may move to Texas or Arizona or the Carolinas or, one of these growth markets. So even in a recession, it's possible that, Texas and these other growth markets may continue to see that migration flux. I don't know, but that's something that I've definitely considered.
I mean, the numbers bear that out. I mean, Texas, look how much we're growing and how much we're projected to keep growing in the coming, decade. I mean, it's millions of people flocking to Texas. So again, fundamentally, you have to feel good about where we're at. We just have some, unfortunately, it's a variable, but it's the largest part of your capital stack. That's the greatest variable right now, and that's anytime the place that's providing you with 75% of your money is gotten a lot more expensive, it's going to have a major impact. And so we're going to have to ride it out, and we're going to
see how it plays out.
What we'll always see is if you go back to the last recession, some of the biggest owners, if you were just to start naming names of who are the biggest owners in the market right now, they were all pretty active during the last recession, or they held on, and shredded water to get through the last recession, and ended up looking really, really good on the other side of it. So I think, this is, I don't know if it'll be a great reset that everybody's been waiting on for all these years. When we got through COVID, not just unscathed, but that values shot up quickly on the backside of that. I thought, well, shoot, if COVID didn't slow us down, a global pandemic, I'm not sure anything could slow us down. And obviously, this has had a major impact. But I do think in the grand scheme of things, it will not be a long-term reset. But I do think in the short term, for opportunistic buyers, there could be some opportunities out there.
So let me switch gears on you a little bit. Talk about one, people are afraid when they first get involved in the multifamily world, calling people like you, calling brokers, like, they're intimidated by it. Like, how do they build credibility quickly? How do they, get the broker to, believe in them and that they could actually close and all those things. So what's your take on talking to new people in the industry and advice to them?
Yeah, I think that's a great question. I mean, I think one of the reasons I love doing brokerage is I love people, and I enjoy talking to people, and I enjoy hearing people's stories. And if this was just about transactions, you can certainly do business that way. But to me, that takes the fun and joy out of this. I would certainly tell anybody, don't be intimidated to call. I've been doing this for a long time, and I've sold a lot of people their first deal. And so I don't have any problems with that. Now, of course, you do want to be credible, and you only get one chance to make a first impression. And so I think that's something to be mindful of. I think some people are really hungry and aggressive, and it's easy to kind of get out over your skis a little bit. And I would say, don't bite off more than you can chew. Slow down. Make sure you're doing business the way that you want to be known, because word travels fast. I had a guy call me today that we just sold a deal to and he said, I've already been called by a couple of brokers, because they saw that I bought this deal. And, he was like, I can't believe how fast word travels. And I'm like, well, there you go, and your reputation travels even faster, especially if it's a bad one. So, I will say this, as brokers, we definitely, we all know each other, and, we definitely look out for each other on that front. Nobody wants to waste a bunch of time or put a buyer in who's going to jerk the seller around, et cetera. So reputation travels. One of the things that we've done over the years that I've really enjoyed, and I don't take as big of a role in it anymore, but I still am involved in it, to varying degrees depending on the deal, is our 75 unit and under team, and I think that's always a great spot to start off, because you have a deal that's not as large. It's it's again not more than you're not biting off more than you can chew. It's a reasonable sized deal, and more than anything else, even if your aspiration is to own something larger and hopefully sooner rather than later, it's a great way to get your foot in the door. Those deals are not as competitive as the bigger deals, and they're a less sophisticated buyer group. So one of our largest clients, we probably did double digit 75 unit and under deals with, and he's now doing 100 plus, and I say 100 plus, really 200 plus unit deals, and we have a fantastic relationship with him, and we know what he is capable of doing, and we've closed a bunch of deals, and so that all started with smaller stuff and has grown into larger stuff as our confidence in one another has grown. So I would say that's always a great spot to start, and good opportunities, good deals, good buyer pool, but even if you come well capitalized and are ready to bite off on something a little larger, I'd say just be coachable, be open to using vendors here that we know and trust, because hey, if you're somebody that we like but we're not confident you can get the deal done, but you're using a lender who we know, or you're using a management company we know, or you're using an attorney we know, those are all things that make a significant difference, because if those people all have confidence in you as a buyer or as a client, then that certainly increases our level of confidence as well.
Yeah, I think that's great advice. So, and that's the advice that I went with. When I was going after my first syndication deal, I was focused on 60 to 100 units. One, for a lot of the same reasons you just said, because the senior syndicators that you're competing with are going after 100 unit plus, 200 unit plus deals, and so it kind of knocks them out. They're not even looking at those deals, and it brings the competition down so you can get your first deal. The other thing that you didn't necessarily mention, which I think is very important, is partnering with somebody that has experience. And I think that if you do that and you tell the broker that you're going to be partnering, even if you don't name the name yet, that you're going to be partnering with somebody from, a multifamily mentorship group or somebody that's bought 5 deals in the DFW Metroplex. Well, now it kind of gives you that's another team member that is adding credibility to you.
100%. That's a great addition to what I said, for sure, because there's not that much to gain most of the time for that partner. I mean, if their heart's to help bring along somebody else, and that's their primary goal while making a little bit of money, that's great. But they also realize if the deal goes bad, it's also their reputation. So
right.
Having somebody that's already in the market that cares about their reputation as a sidekick is a great that's a great strategy to just kind of help you get your foot in the door.
Absolutely. So talk about I don't know if you have these numbers in your head or not, but like the types of buyers kind of over the last year, maybe characterized between like syndicators, out-of-state buyers, 1031 buyers, first timers, however you would classify, but maybe, hey, you're seeing this, over the last year, the buyers have shifted from X to Y.
Yeah, I mean, I don't think it's hasn't been a crazy shift, at least last year. I think we did 70 some odd deals last year. I don't remember the exact count, but I think because Dallas has a couple of very large apartment mentorship groups, here we certainly have a ton of local buyers, local syndicators, which is great. They're folks that we see often and know well even before we've had a chance to do a deal with them a lot of times. I will say that, I guess one trend, and maybe this is what you're alluding to, is, certainly post-COVID with the lockdowns in certain states and just some of the political stuff in some of these states has caused some people on the West Coast and in New York and Chicago to reevaluate, hey, do I want my money parked here, or should I go to a more landlord-friendly state? And so I would say we've seen more of those folks kind of come into the market than we had in the previous couple of years. It used to be that it was very heavy California buyers. In the early part of my career, it was not unusual. We'd have guys that we would kind of flock to Dallas from the West Coast, and more 1031 guys probably back then. And then that as more syndicators have started buying deals, then and putting these partnerships together, there are less 1031s out of syndications, obviously, because that's just a hard thing to do. So we have had some 1031 guys in the last 12 months come in, more than probably the 24 to 36 months prior. But I would say in general, our number one buyer is still probably a Texas-based syndicator. That's probably who our most likely buyer is on any given deal. Though the deal I closed, it's good to know. But the deal I closed today was that I mentioned earlier, that the low leverage buyer, he was from California, not in a 1031, but just looking to move his money to Texas with a partnership.
Sure.
And then the one I alluded to earlier, that the agent in our West Coast office, his client that he introduced me to, that we plugged into a deal, that was a one-off, California-based owner, not a syndicator. So I mean, those guys do come in and buy deals from time to time. But in general, if it's a fully marketed deal, it's probably either a local syndicator who's putting together a group and they want to do something, or somebody, if they're out of state, that probably already owns here and is trying to add to the portfolio.
Oh, that's helpful. Hey, talk about perseverance and determination, because like getting into this space, what I've seen for myself and also for other new people breaking in, it can take a year and a half, to get your first deal. And there's a lot of deals that you're involved with that you're spending a lot of time on, you're putting in offers. And as a broker, you see those people, right? You see them, oh man, they came in second or third again, and you, I would imagine as a broker, you like some of them and want some of them to win at some point. But talk about that perseverance and determination, because without it, there's some people that come in and they go after a few deals and then they don't win and they kind of peter off.
Yeah, no, I won't name names, but there's definitely some groups that, they made runs at our deals for feels like multiple years, and we're close, but just not the ultimate buyer for a while, and finally, broke through on one, and then, as generally is the case, that ends up leading to other, transactions. And so I do think, number one, I think buyers and investors in general underestimate just how we as brokers probably feel about people constantly not winning deals. It's not something that anybody enjoys. No, I don't like delivering bad news to people over and over and over and over again. I mean, that's my least favorite part of the business, no question about it. So that's we're rooting for the people that are continuing to pursue our deals, and we'd love to help them. And honestly, if they just persevere and are diligent and professional about it, and it's like anything, good things are going to come to the person that's doing the right thing in the space. Eventually, somebody's going to call you and you're going to win that deal, or we're going to call you and you're going to win that deal because we knew, hey, man, you just missed out on this deal. But hey, I know about this one over here. It's very similar. Why don't you guys try to make a run at this? We want to give you first shot at it. That happens all the time. I had that conversation today with somebody that he had missed out on a couple of deals we sold recently that were pretty similar to another deal that we are getting ready to list. And because of the capital markets right now, the owner is willing to sell it, preemptively, as most transactions are right at the moment. And I just said, hey, this one's going to be coming out soon, but you might want to take a look at it now because A, the owner would entertain an offer, and B, it's very similar to those other deals you offered on that you didn't get. And so that particular investor was excited about that opportunity. So that happens, but I will say, there's very, very few people that have looked at our deals over the years and offered, multiple times on our deals over the years that it didn't eventually work out in their favor. So I would just say stick with it, and everybody has to go through that. And listen, I fully understand and appreciate how hard it is, even just to get to the best and final, how much work it takes to get to the best and final. And you're filling out questionnaires, and you've toured the site, and you've met with contractors, and you've gotten your debt quotes, and you've gotten a debt quote scrubbed multiple times, and you got your insurance lined up. And it is a lot of work. And if you're doing that 100 times a year and you go 0 for 100, that's tough. It's tough. And it happens. And so, we get it. We always say on our best and final calls, like, hey, independent of the final outcome, thank you for being here, and thank you for getting to this point. We don't take it lightly because we know how much work it is. So I would just say, as a broker,
the syndicator probably doesn't hear anything.
They're like, that's right.
They don't hear anything after it's not you.
Yeah, that's right.
You keep on saying stuff and they don't even hear it.
I think that is probably the case. And I would just say that I could give you a lot of success stories where eventually the perseverance paid off. And I would say I probably couldn't give you many where the perseverance didn't pay off. There's very few that have said, I'm just not even going to look at your next deal because I never win it. Most of the time, they may not feel optimistic, but they keep looking, and eventually it works out in their favor.
Yeah, and you know what? I know some syndicators that I felt like we're on the cusp of like throwing in the towel, like just getting really frustrated. And then they broke through and got their first deal, and maybe they partnered with somebody that had experience, and they took a smaller piece on the deal to get in. And then all of a sudden the floodgates opened up, and boom, they hit 2, 3, 4, 5. Like they just, and that, I think back to people like that, I'm like, they may have left and not continued. And then once they hit that first one, they just were off to the races.
Well, and I will say this: if you find yourself in a spot where you've made several offers and you haven't won anything, at some point you probably have to look in the mirror and say, "Hey, am I doing something wrong? Like what? Hey, Mr. Broker, why didn't I win? Was it just because of price? And a lot of times it's because of price, but sometimes it's because of earnest money or timing or whatever. But at some point you got to say, hey, why am I missing out? And if you're constantly, too low on price, then you might say, hey, maybe I'm a little uncomfortable, but I'm going to have to get a little bit more aggressive on this underwriting because I'm tired of watching people sell these deals 5 years later, and they've got a 2X, 3X deal on their hand that I passed on for $200,000 or $300,000, because I didn't have aggressive enough assumptions or whatever. And sometimes I'll say this: sometimes people are not great on the seller-buyer interview calls, right? Their enthusiasm for the deal doesn't come through, or vice versa. Sometimes people are fantastic on those calls, and the seller's like, hey, I think all of them will perform, but I liked Darin. Darin was a great guy. I want to work with Darin, right? Like that happens too. So at the end of the day, it's never our decision. We're trying to present the seller with outcomes, and we can give them, our background, our history, our recommendation. But ultimately, the seller's going to make the decision. But we want to do the best we can to help position people as best we can. And if you're constantly not winning, then I'd say circle up with the people that you know in the business and say, hey, what do I got to do to get over the hump here? Brokers, what do I have to do to get over the hump here? Joe Blow partner who owns 5 deals, you figured it out. What do I have to do to own 5 deals? And be honest with yourself and be coachable and receptive to doing some things different.
That's huge. I mean, listeners, you heard it. I mean, ask what you could do differently. And the other thing is, and you just said it there, like, look at the people that are winning the deals. So you lost the deal. Maybe the people that won the deal. Go back to them. Ask them, hey, can I see your underwriting? Maybe they'll share it with you. And you can look at the differences and learn from that, for the next time. Participate on people's webinars. They won the deal and you're on their investor database. You get the invite. Maybe you're not looking to passively invest in that deal, but get on the webinar and see how they're pitching the deal, see how they underwrote the deal, and then you learn from that for the next one.
Yeah, I would just say that, when we get to that point in these deals, what the seller's really looking for is, if I pick you, Mr. Buyer, this deal's done. I can go to sleep at night. I don't have to worry about it. You're going to close. So if your LOI doesn't convey that, and your interaction with the seller doesn't convey that, if you get a chance to talk to the seller, and at the end of that call, they aren't like, man, this guy really wants this deal. And, if they don't even hear you say, hey, I know you want a smooth closing and we're going to be your guys. I promise you, we're going to be great buyers for you. If they don't feel that way, then you're probably not, you're probably not going to win the deal, right? So I would just say that's the biggest intangible. I mean, if you're $1 million less on price, it probably doesn't matter how excited you are about the deal. But assuming you're to the point where there's a seller interview call, it's neck and neck. So just make sure that all of your homework is reflected. The amount of effort, energy, and that they know, hey, this deal's important to me, and if you select me, I'll see you at the closing table in 60 days, and it's going to be a really smooth process.
So I tell people this, and I've never asked a broker if this actually happens. So you tell, you tell me, but I tell people, like, hey, when you start the process, think about that last meeting between the broker and the seller. And maybe there were 15, 20 offers. Maybe there were 6 or 7 in best and final. And now there's 3 that are on the table. And I'm like, think of the seller asking the broker, who should I go with? And why is the broker going to sell you over the other 2? I don't know if that happens or not. I assume there's something like that happens. But
it does happen. Yeah. Okay. I mean, again, and again, what we're doing in that moment is saying, hey, here's what I know about each of the 3. So-and-so, has been incredibly thorough. They've asked, lots of questions. They're using vendors that we know. They're putting X amount down. They're syndicating out of this group that we've done lots of deals with. This other buyer, we don't know them at all. Hopefully they can get the deal done. They seem to like, those are the kind of things the seller's wanting to know. And again, I know those questionnaires that buyers fill out can be a little bit tedious and time consuming, but I mean, and I look at that as that's your chance to shine, right? If you've done all the homework and you've got a detailed budget and CapEx budget and renovation budget, and you've budgeted for surprises, make sure that shines through. Like that's what the seller really cares about, right? And as a broker, I don't want to have egg on my face. If I tell you, hey, I really feel strongly about this buyer and they don't perform, I don't look good. You
don't look good, and you don't get your commission, and
that's right.
Both.
And if we have to start all over with the next buyer, that next buyer may have moved on, right? Or they may want to lower their price because the deal's coming back around and they feel like they've got the leverage. So, sometimes for the inexperienced guy, that's maybe a strike against you, right? You're a riskier choice, for the broker to recommend or for the seller to choose. And the seller has his own partners to answer to, so he doesn't want to look bad either. So
but
you've got to
that's
convey.
The point. It's like, think about early on how you can overcome the fact that you're a first time buyer, right? So somehow you have to overcome that, right? Because
that's right. And to your point earlier, you bring in a higher powered partner with a better resume,
right?
And you do this deal, and maybe you don't make as much because you have a partner in, but guess what? Now the next time you go buy your next deal, you're an experienced owner. Well, I own this deal, and the person doesn't care that you own that deal with a partner. All they know is you own that deal,
Right.
And so,
exactly.
So I think play the long game, right? We're not trying to do one transaction. We play the long game as brokers all the time. On our team, if you're working with us, we're not treating you like a transaction. We're treating you like a friend that we want to be successful and we want to do lots of business with in the next 5, 10, 15, 20 years. And I've been at this now for 18 plus years. I've got a lot of clients that I've done a lot of deals with, and that's why. So,
and I can attest to that. I can attest to that. That's the way I was treated. So I really appreciate that.
Yeah.
Hey, you guys have accomplished so much. That DFW is like the heart of, what's your next big stretch goal after this? I mean, like, where do you go from here?
Yeah, well, it's interesting. I mean, I think first of all, the way I approach anything that I ever do is I'm not watching the highlight film. I'm watching the tackles that I missed, right? Like, how can I do better than what I'm doing right now? So, in addition to growing the team and all that, that's great. But let's be the best version of ourselves that we can be first and foremost, right? We all have areas that we're not as strong in that we can get better in, and so I think that's the first step for us is we're figuring. As long as I've been doing this, I'm still figuring out things that I did this a certain way for 15 years, but this new way is working much better. Or hey, I see this other guy that's very successful over here. And he's selling industrial buildings, but he does this. So I think those are all things that we're constantly, literally evaluating on a daily basis. I think the second part is we're trying to really put ourselves in the shoes of our clients. And so again, like your deal is an example. We want to be as a part of that deal, from the time we sell it to you, and hopefully get to bring it full cycle for you on the back end, and then keep that momentum going. So that's something that over the years we want to keep growing with our clients. What we see our clients telling us over and over right now is they want to buy bigger deals, they want to buy nicer deals, and so we're doing more and more of that. And so I think moving forward, we want to keep doing what we've always done, which is workforce housing. That's our bread and butter, but we're also trying to find ways to get our clients into some of these nicer, newer assets. We've had some success with that on the periphery. We did a deal recently in Van Alstyne. We did a deal in Sanger. We did a deal in Weatherford. So we're doing deals, on the outskirts of the Metroplex. We've done some deals in secondary and tertiary markets that are nicer, newer deals. Our secondary and tertiary market team is growing very rapidly, so I think there's a tremendous opportunity there. I will say this, I bought a deal in Oklahoma after COVID that's gone really, really well, but I think one of the things that I like about that particular area, it doesn't maybe have the growth, it's not as sexy as DFW is, but your taxes, you don't have to cringe when you get the tax assessment in the mail where you're like, oh, I hope I don't get killed with taxes this year, and oh, I'm about to start this long process. It's a disclosure state. They know what you paid for it. And their tax rate's much, much, much cheaper. So that's been kind of a nice change of pace and a nice opportunity. And I'll tell you this, as much as we say it's not a big growth market like DFW is, or not to the level DFW is, we've taken revenue up on a 158 unit deal by over 50,000 a month in less than 24 months. So,
wow.
I mean, we've had tremendous success really growing rents there and managing the deal much better than it was managed before. And we've literally gone from 77,000 a month in collections to, really like north of 130. I think we'll be a little north of 130 this month.
That's a huge difference.
Unbelievable. Yeah.
I've heard mixed reviews about people going into the different markets. Some people have done
you have
very
to have the
well,
right team.
right?
Yeah.
And some people have struggled, because they looked at it kind of like a DFW deal in a different market, and it didn't work out that way.
Yeah, no, I think the team is super important. But I will say this: you can find a lot more deals that are really mismanaged in some of those markets. You can find a lot of deals that haven't had much of an upgrade program done in those markets. The deals are much cheaper in those markets. The deals are less competitive in those markets, and the debt is really pretty similar. And so anyway, I just think as people are saying, hey, what's an alternative to DFW? It's worth pursuing, and I could tell you, plenty of people that have, had deals that didn't go as good as they wanted in DFW too, right? So I think a lot of times it comes down to your team and your plan. And if you have a bad plan and a bad team and a great market, you could still have a bad deal. And if you have a bad team and a bad market, yeah, you can have a bad deal up there too. But it's I just think that the taxes have been a really nice welcome relief up there, and so that's just been something kind of interesting. We've got a handful of deals up there right now that I think have got some eyeballs on them that are looking and seeing that same thing. So anyway, I mean, I think our biggest goal is just continue to grow with our clients and continue to do what we're doing, but just do it better than we did it yesterday.
Fantastic. What do you like to do outside of work for fun? I've seen you on the slopes.
I definitely like to ski. You and I have played some golf together.
We played golf together,
That's
so
right.
I know you golf.
That's right. I like to golf. I like to ski. Honestly, my wife and I love to disciple, mentor young married couples. So that's something.
Really? I didn't know that.
Really fun.
From your
get
church,
a chance to do. Yeah, from our church.
Awesome.
So that's something that we really have enjoyed doing. Love to travel, and I would say the majority of our time is spent on weekends doing kid stuff. Baseball tournaments, basketball tournaments, volleyball. You name it. So that's a blessing. It's a joy for us. Our kids are lots of fun, and so we love to just get to be mom and dad and enjoy all that entails on the weekends. And I say on the weekends, and dang near every night of the week as well. So it's keeping us busy, but it flies by too.
It does. It flies by. I've got 2 college age kids, so I could attest to the fact that it does fly by.
And I can also tell you, I know one other area that you and I can relate in is I love Texas A&M.
My son goes there, and
I'm very into Aggie sports, Aggie football, Aggie baseball, Aggie basketball. So.
Well, they're doing good in baseball right now, right?
They are.
So yeah, it's a weird place, man. People go down there, they drink the Kool-Aid, and they're just sucked in.
Yeah, that's right.
Hey, well, I appreciate you coming on. Hey, listeners, if if you're looking in DFW, you're listening to one of the top brokers in DFW. Call him, call his team. And I've been very, very, very happy with the not only the professionalism and helping me win the first deal and also exiting a deal, but also look, you could tell that they care about people, and that makes a big difference. So it's a relationship business. This is a good relationship to have. I appreciate you coming on, listeners. I hope that you enjoyed that one. Until next week. Signing off.
Thank you for watching Darin Batchelder's Real Estate Investing Show. If you liked the episode, please click the like button and subscribe to the show. If you already are subscribed, then thank you, and please share the show with a friend. Check out other free resources at darinbatchelder.com/learn.